Hi, I'm John Cunningham. I'd like to spend a few minutes talking about a topic that happens to be of great interest to me, and that is the following. As you'll know if you've looked elsewhere on this website or if you've heard any of my other videos, that my practice is focused simultaneously on LLCs, law and tax, and on new Internal Revenue Code Section 199A. And the topic I want to discuss today is how lawyers and accountants should work together when they share 199A clients. It's a big deal for me and for accountants, but also for business owners because they want to make sure that their lawyers and their accountants work together to help them maximize their 199A deductions. So how should they work together? Before I answer that question, and as a basis for answering it, I want to say this. I don't do returns. People wouldn't want to pay me to do returns, and I'm not competent or trained in doing returns. But of course, that's what tax accountants, that's one of the main functions of tax accountants, along with planning. They do tax returns. And when you do the tax returns for somebody, I know you'll know this from your own return, you know their tax situation with a depth and a breadth that there's no other way to understand your tax situation so well. So the first thing I ask when people call me up and ask me to help them maximize their 199A deductions is, do you mind if I talk with your accountant, your tax accountant, about your case? And I've never heard anyone say no. And so then I talk with them, and I find invariably I learn things about the overall tax situation relevant to the 199A tax deduction of my clients that I simply couldn't learn by any other means. So I have to work with tax accountants as closely as I can if I'm going to do decent work for my clients. But the reverse is also true. I'm a lawyer. I know a lot about LLCs. I know a lot about how to restructure entities, business corporations, and LLCs from a purely legal viewpoint as well as from a tax viewpoint. And accountants, unless they happen to be lawyers, and of course there are some accountants that are also lawyers, they are unlikely to know these things, and technically they're not even licensed to talk about, well, here would be a typical example. Well, my client has a state law business corporation, taxable as an S corporation, and his joint income on his federal tax return with his wife is, let's say, $280,000. And that tells us that his deduction is going to be 20% of his net business income. So it becomes obvious to both of us that he doesn't want his company to be an S corporation. He probably wants it to be a sole proprietorship, or if he wants his wife or someone else to be a partner, to be a multi-member LLC taxable as a partnership under the 700s of the Internal Revenue Code. So he can't be a state law business corporation taxable as an S corporation. Let's say he's got to be a sole proprietor, but he can't be a state law business corporation and be a sole proprietor at the same time. The tax rules don't permit it. They happen to be called the entity classification rules. So how do you get from A to B? And the way you do it is you do what's called a statutory conversion. There's other ways you can do it, but the classic way is you do a statutory conversion of the state law business corporation into an LLC. Let's say it'll be a single member LLC. And it elects out of subchapter C, it basically dissolves its C corporation unless there's a significant tax cost in its doing so, and it becomes a sole proprietorship. So you need to know a lot of tax, but you need to know a lot of law. One thing that I think I can fairly say is characteristic of my practice is that I meld I'd like to think, substantial knowledge of LLC law and tax with a substantial knowledge of subsection 199A, because you really need both in order to figure out how to maximize the section 199A deduction of your clients. So I ask a lot of questions of my clients, but I ask the same question about them, tax-related questions of their accountants. I decide with their accountants what the maximum deduction is that they can get if they don't restructure in any way. It's a joint decision among the client, the tax accountant, and myself. I propose ways, probably worked out jointly with the accountant, as to how to restructure to maximize the deduction, and then I implement the deduction. It involves partly tax stuff on which the accountant may know as much as I know or more, but also legal stuff which the accountant may not know and in any advice can't give advice about or implement, and then we're done. And sometimes these restructurings that we do result in thousands of dollars a year of extra tax savings that the client couldn't have gotten, but I can't do this unless I work hand in hand with the accountants. That's what I think should be the relationship between lawyers and accountants who share 199A clients. If you'd like to know more about this, I've written a book about 199A. It's got a long title, but I'll give it to you quickly. Maximizing Pass-Through Deductions under Internal Revenue Code Section 199A, a long title, or just give me a call. Thank you very much.